Want my latest market insights? My latest report, Catching This Falling Knife of Metal Madness, is now available. Scan this QR code or click on the link in the description.
Samantha, we had you on the show I think it's about 3 or 4 months ago, and I really enjoyed the interview. You gave us a good 10,000 foot view of the gold and silver markets. You was talking about the broader equities, and today is a fantastic day to discuss these things again, because right now everything's red. The whole of the market's going down. I can't see anything that's up today. And gold and silver are just coming off some interim peaks, and you pretty much called that, so we'll definitely get into it. But before we really dig deep into these specific subjects, just what's your take on what's going on right now, Samantha? Is this just regular volatility, or could there be something underlying this that's more significant?
When we actually spoke last was in early October. And at the time I had, continued my bullish thesis on trend long precious metals and industrial metals. But I warned of metal volatility, specifically calling this kind of funding stress from the metal volatility would seep into a higher dollar. And we did have equity volatility, but for short duration. This time was very different. And I actually put that out there. It's not about the rising dollar, although I was expecting a bounce, and it was perfectly timed with Kevin Warsh's announcement. But it was not Kevin Warsh's announcement as Fed chair by Trump that caused this turbulence in the metal market. Absolutely not. So, I detailed all of this very, very straightforwardly in a January 22nd post saying I'm looking for an event that's going to trigger the top. It actually was the options market in large part, and this silver ramp that just got way, way, way ahead of its skis. And it did have a very nicely timed top. When we were talking on the 21st, 22nd, I wrote up my long thesis about I'm looking to time the top. And it was lucky or good. I run a live trading room every day. So I caught it live. I had already posted my thesis that it was going to be coming in February. So I had a very firm and high conviction that we were going to have metal volatility in February. But then it was literally live on that 28th, 29th, both days pre-market. I said, nope, we cannot wait until February. You must protect now. So I did time it this time as well, because I had already done all of the work to research from my intermarket as well as the fundamentals, supply and demand. And I had laid all of this out in a very long thesis client post, particularly as it related to the options market. And I explained that the options market is like a fire. It needs oxygen to maintain this elevated implied volatility, and it is expanding, which is helping, obviously, the price, where focus is more on the fundamentals. My focus was on we are extremely an outlier as it relates to optionality, skew, and this fire, if it does not have oxygen, it will start to burn out. And that creates this volatility as well. And they were talking, of course, in silver, gold, paper markets, but also XAG and XAU USD. So the gold and silver focus had all kinds of reasons for this top to kind of burst. And we did have a 39% pullback, peak to trough in those 2 days. And then I updated my call, which is, wait, this is a falling knife. We need to stabilize here. So that's exactly where I'm at. I've got actually some lower levels for gold and silver to retreat. And I think once we get there, we'll start to kind of digest. But in a nutshell, we've hit investor confidence hard. So I'm not talking about the diehard trend long folks, right, in precious metals that are hedging against all kinds of really, really important reasons, or the fact that China and other countries are settling trade outside of the US dollar, US treasuries, and petrodollar as a continuation theme. This is not going to stop. Central bank accumulation, retail hoarding, and that doesn't go away. The macro backdrop doesn't go away. But silver in particular is a commodity. It's not a reserve asset, so it needs to be treated differently. Anyway, long story short, the combination of the metal volatility, crypto volatility would seep into equity volatility. That was my bet. That was what I posted. And we did have that. And then we've had follow through because of software. So when you say nothing is up, that's not true. We actually have had an immensely powerful value rotation. It started in November. Eyes on the prize. That's my focus, is sector rotation, market direction, stock selection. But this sector rotation has been outsized. So out of growth into value, large cap value, inflationary assets in particular. And this has really continued. We had lots of green on the screen while the software was imploding, software stocks, crypto, and metal volatility all were front and center. So I think there's actually reasons for each of these to be in distribution. And the software is very much AI focused, worried about who will survive and who can thrive. And they're pricing out a lot of obsolescence right now. They're worried about software companies, SaaS, that won't be able to compete because of the advancements that have been moving very quickly in the software space. We could talk about that. Separate from metal volatility space, silver resembled kind of a 1973 peak. And sure enough, we got that lovely, 39% pullback of size. And I think equity volatility is a different beast because all of this combined, crypto losses, metal volatility, now software volatility, is just hurting investor confidence. And it's going to be a while before we can actually catch our breath